How you doing, YouTube? Welcome back to another video with the House Money Investing channel. In today's video, I got a couple stocks for you, a couple of stocks that I sold out of, and some gains I locked in. If you like this type of content, please hit the like button, subscribe, hit that bell if you'd like to follow my journey. I do display 12 different brokerages on my channel. I currently have over just about 1,300 stocks at the moment in my 12 portfolios spread all the way around. I do analyze stocks 7 days a week, so I'm constantly coming out and giving you guys nice stock picks to get into. I'm currently up on all my portfolios. Basically, what I do here is something I call house money strategy. It started back in June. I've accumulated over $12,500 worth of free shares. Basically, what I do is put capital in the market, wait a set number of days, pull that capital out, and just leave only my gains in the market. Hence free money, house shares, risk-free investing. There is a link below in the description. You can hit sign up for Webull, deposit $100. You get free 4 shares, valued up to a total of $3,700. You can liquidate those shares right away. You can, liquidate your $100 and pull it back out if you would like. Also, Robinhood's a link. You can get a free share there. M1 Finance will give you $30, and moomoo will give you a free share as well. So let's jump into it. The first stock pick I got for you guys is ServiceNow, ticker NOW. This thing grows massively, about 100% a year. So very, very good growth stock here. It's got some very great analyst ratings. Looking at 32 analyst ratings, you got 84.4% buy rating on this company. ServiceNow's superior product has led to rapid share gains and exceptional retention within the ITSM market. Now the company is using this strength to expand into other areas of ITOM. The company has added additional growth drivers, including customer service and service delivery, which should help propel reverse growth over the next 5 years. GAAP operating margins have was break even for the first time in 2019, and we see a decade-long runway for expansion. They also have very great EPS, and this is a software company out of California, which basically engages in the provision of enterprise cloud computing solutions. It offers customer and facility service management, orchestration, core servicing mapping, cloud and portfolio management, encryption, performance analyst, service potential designer, visual task boards, and configuration management database. So a nice play into the cloud computing sector of the market, which is very hot right now. And this thing's been growing like wildfire. So it's going to continue to grow. It's something I'm going to add to my portfolio and go ahead and do a swing trade on. Then we got T-Mobile, ticker TMUS. This is something I own long term already. I am currently down on my position 1.71%, but that's basically due to the pandemic. It was down about 10%, so it is going to recover nicely, and it usually gains about 40% a year. Not a dividend payer, just strictly growth. And their acquisition of Sprint and Metro, puts them in top competition with other major telecom services like Verizon, AT&T. There's 28 analyst ratings on this company of 89% buy. After 5 years of unprecedented success, T-Mobile has the wind at its back. The firm's reputation with customers is strong as ever, and its network is delivering service that least matches other carriers. Free cash flow should be positive during the Sprint integration and then grow sharply, providing the ability to return capital to shareholders. The Sprint merger promises to catapult T-Mobile to the top of the industry with ample scale to compete and spectrum portfolio no other carrier can match. Heavy network investments will bring operating costs savings to a lead of 5G. They have also very good analyst ratings and EPS. And basically, this is a telecom company which engages in wireless communication communication services under T-Mobile and Metro PCS brands. It offers postpaid and prepaid wireless voice messaging and data servicing and wholesale wireless servicings. And like I mentioned earlier, they have a play in 5G. 5G is going to really grow and explode and expand over the next coming years. So I see a nice growth here, still left for T-Mobile. So I'm going to, add to my position that I currently already have, average dollar cost average in and average down my average cost, and work on those gains. Then we have a stock I sold here, which was Norwegian Cruise Line. This was a very small position I had. It was about a $2 purchase. I lost 3 cents on this trade, so wasn't able to lock in any gains. Next here, I bought $1 of CIIC, which is a SPAC company merging with a rival, which is doing EV buses. That came from me selling $4.36 of SIG Merge Corp. This was only a $4 investment I made in the public account. I only gained 36 cents. I was investing in this company for about a little over 30 days. I do hold CIIC long term in another portfolio, which I'm up, over 7% in that position. But I just swing traded it here. That way I can add more shares to the position that I already have. And I profited 36 cents, so I just rounded up to $1 and bought that dollar's worth in Robinhood and took out my principal and got my principal back. So basically between these two trades I made 33 cents, which isn't much. I have over 1,300 stocks, so I'm going to be selling out of a lot of them over the coming days. So I'll have a lot more profits and a lot more larger positions. These were just the first ones I started, which I started at $1 and I worked my way up. I spend $1 more on every share I get, until I spend about $28,000 or so, anywhere from 13 to 28,000, and that's the amount that I use to swing trade with. Anyways, that'll be it for this video. If you like the content, hit the like button, subscribe, hit that bell, follow my journey, and you'll get more content similar to this. I appreciate you guys for tuning in. I'll catch you in the next one.